Many people want to grow their money. Two popular options are gold and stocks. But which is better? It's a question many new investors ask. This essay will break down the differences between these two investment options in simple terms. We'll look at their pros and cons to help you make informed investment decisions. Investing is a journey, and understanding your options is the first step. Whether you're just starting or looking for new avenues, knowing how gold and stocks work is crucial. Let's dive in. This essay aims to simplify the complexities surrounding gold and stocks. Remember, investing involves risk, and seeking advice from a financial advisor is always recommended. Gold has been treasured for centuries. Its beauty and rarity make it a valuable commodity. People have used it as currency and a store of value for a long time. Today, gold is seen as a safe haven asset. This means during uncertain economic times, people turn to gold for stability. The value of gold tends to rise when other investments fall. This happened during the 2008 financial crisis and the COVID-19 pandemic. However, it's important to remember that gold prices can fluctuate too. They are influenced by various factors like global demand and supply. While gold might offer a sense of security, its returns are typically lower than stocks in the long run. It's essential to consider your investment goals and risk appetite. Gold might be a good option for diversifying your portfolio, but it might not be the best for high growth. When you buy a stock, you are buying a small piece of ownership in a company. This is called equity. If the company performs well, its value increases, and so does the value of your stock. This is how people make money from stocks. Investing in stocks offers the potential for high returns over the long term. However, it also comes with risks. The stock market can be volatile. This means prices can go up and down quickly. If a company doesn't do well, its stock price can fall, and you could lose money. Despite the risks, stocks have historically outperformed most other investments over long periods. This is why many financial advisors recommend having stocks as part of a diversified investment portfolio. So, which is better, gold or stocks? The answer is, it depends. Both have pros and cons. Liquidity refers to how easily you can buy or sell an asset. Stocks are generally more liquid than gold. This means you can sell stocks and get your money back more quickly if you need to. When it comes to financial protection, gold is often seen as a safe haven asset. Its value tends to hold up better during times of crisis. However, stocks have the potential to offer higher returns over the long term. In India, stocks offer more tax benefits compared to gold. Lastly, gold is considered a less risky investment than stocks. Choosing between gold and stocks depends on your financial goals, risk tolerance, and investment timeline. If you're looking for long-term growth and are comfortable with some risk, stocks might be a better option. If you're looking for a safe haven asset to protect your wealth and are not as concerned about high returns, gold might be a better choice. Before making any investment decisions, it's crucial to do your research, understand your risk appetite, and consider seeking advice from a financial advisor.